All right, let's see what we get this morning. Da, 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 da. Good morning. What's up, Mike? All right, let's pull this up. That's crazy. That's unfortunate. Just kind of marking up some spots. We expected price to run higher. I guess in general, right? Bullishness was kind of the objective. But we actually just gap straight through the highs and reach into that buy side before the market even opens. So usually when that happens, we don't expect much movement, especially because we have CPI tomorrow as well. But we'll see if we can't get, well, at least follow price this morning. Let me see. Cool. Yeah, crazy move for sure. Huge 1 minute candlestick. Which I'm not even sure. I don't even think we had news or anything, which is wild. No, I was tape reading this before I went to bed. I forgot. Because I figured we'd at least get into that high right there, but gotta be honest, did not expect this. So yeah, that buy side swing's already been targeted. Which means at this point we would just start looking for highs, daily highs now. Okay, so we got some higher time frame levels. I don't know if we'll come back, but let's use this. This could be a potential daily inversion if we're going to come back into it. 4 hour. One hour. Okay, so as we work down the time frames, just kind of looking to see where we are. Already pretty ugly opening. So we'll see what side we attack. In this case, I'll kind of just look to see if buy side or sell side gets targeted first, and honestly look for a reversal against that. Especially if we run out highs one more time. Wouldn't mind trying to get back into some of these sell side areas. Let's see what the open has to offer. The 830 New Week opening gap. Look how large that RTH gap is. Sheesh, that's crazy. Cool. All right. Well, let's hang out for a few hours, see what we get. All right, personally, as I mentioned, I would, if I'm going to look to enter something, I just want to try to target shorts. Just because we've already moved so much higher. I feel like people are going to want to chase that. So for me, I'd rather try to target a return back into the range. 930's already cleared a low. Might just keep consolidating. We'll find out. This level here is that daily swing point, so that's going to be pretty important. That's kind of why we're watching that as well. But it's the old buy side. These pulls get used more than once. Ideally for me, I'd kind of like to see this level here. If we're going to try to get a short, that's kind of what we'd be reaching for. Trying out a new indicator this week. This blue dot here will be the first presented indicator, or first presented fair value gap. So just another thing to have on there that's right, nice to reference. So already we're about to leave that open. I want to see if that's going to be what propels a short off rip this morning already. First fair value gap put in. As we trade into it, we'll see what happens. If we invert that, we may want to try to revisit 830 potentially. But like I said, I would favor some runs on sell side, so I think, at least personally, I'd want to see this fair value gap hold us. Even if we kind of overtake it. Maybe we'll claim it. Tough as far as entry point, right? Because in theory, if you're aggressive, you could do this. That's valid. And then you could even target just like 5 handles or 1 to 2. Right, that'd be perfectly valid. With back-to-back large fair value gaps though, right, it's often smart to at least try to protect some of that, so you would have to open up your stop a little bit more than I guess what I would favor. So we'll just kind of follow this move and, right, expect this fair value gap can hold us. and accelerate us lower into some of these lower objectives that we have. Right, aside from this sell side pull, if we kind of just look left in here, you'll notice untapped fair value gap here. So we accelerate, we never actually trade back into that. So we have an inefficiency right in here that price may want to reach for, right? We'll look for that first fair value gap to maybe reach into that and then bounce from there. If we can get and close below that, I think that sets the stage for us to continue to run lows. Right, notice all these lows. So this is obviously external low, but we have a low here, low here, low here. So just a lot of inter-range liquidity points. So far, fair value gap holding up nicely. We're also looking for lower prices just because RTH gap's so large. This is an instance where I don't really, I mean, if we want to reach it to midpoint, that's cool. But we may not get into the midpoint, but even the fact it's down here is just gonna act like a draw on price. So there's that first tap into the unfilled fair value gap, as we mentioned, falling short of its consequent encroachment. That to me means we'll probably want to revisit that, so continue lower as well. If we're gonna close below this fair value gap, my attention would go here, because now, right, as we create wicks and then trade through those wicks, especially if we leave a fair value gap, I want to see if those areas will continue to be used in price. Yeah, just too small. Not in a rush to do much today. I don't necessarily trade until following CPI anyway, so for us to get in, it's going to have to be very obvious this morning. So now, as we said, closing below the wick here, leaving now another bearish fair value gap. So we watch that, right? Does this area of price become sensitive, and do we want to basically hold from there? To then attack this low and maybe get through that fair value gap. Closure inside, so once again using bodies to tell the story, rejecting off the fair value gap as we expected, clearing out a low one more time, and now we've delivered into the low of the 1 minute. So we'll see what happens here now, because in theory really no other inefficiencies, like right, well, this one here has already been filled, all the volume imbalances have been filled, and now all of these in here have been filled. So if we really look from this leg low right to the highest high, all of the inefficiencies now have been repriced into, which to me means if we do start kind of reversing and can clear this, so we use the bearish fair value gap paired with the wick, if we could overtake that, that should be an area that we want to hold us higher. Still would prefer this sell side, right? So that's kind of what I'm looking for, but just preparing for the opportunity or the chance that price does want to start reversing. Ideally, we just continue to see price hold these areas. Bodies are doing a good job of continuing to close lower, so now we would look for the 1 minute to actually get traded through. We have yet to close below it. A lot of wicks. Closure below that, as we said, signifies that we should be able to attack some lows in here at least. I'll kind of put the just the closest one here. So for the time being, this is kind of what we're looking at. Gonna move the RTH for now, just because it's such a large gap. Or not. Oh, that's our new week opening gap, actually. Oh no. Update. Guess not, we're slow this morning. Sell side here, sell side here. Look at the bodies. Wicks are doing damage. Bodies cannot close below 1 minute consequent encroachment. So right now it's just stuck between the PD rays, as we said. We can act, or we can expect that this will act as a speed bump if we're on side and price wants to get into this low. So still watching here, this becomes really the main area of interest. We can kind of just spend time in here back and forth, but ultimately we want to watch if this low gets ran again to target some sell side. Cool, kind of as expected, right? Just returning up into that premium. Now we watch this low. That is the low that will be targeted. If we can clear a low and close below the 1 minute, look at that delivery, wow. Perfect. Right, so regardless of our bias, I just always like seeing perfect delivery like that. Reinforces those algorithmic signatures. So pretty interesting here now, because we've put in a new swing low, had an intermediate swing point, we cleared that, and now we have a swing low here. So as this candlestick closes, with this swing low being put into place, I'm pretty interested to see if we want to accelerate quickly through now this actual discount or this premium. If we accelerate through that premium, as we said, we're looking for more bullish delivery, if anything. Coming off a swing low inside of a discount here. Especially now, right, if we negate previous premiums. Once again, just precise delivery, perfect delivery into the high of their fair value gap. If we're bearish, right, this high is protected. As we see, we haven't got in there. Now that we've hit the high of this fair value gap, ideally we would run lows, but like we said, Monday, day before CPI. All right, let's not get too lost here. Zoom out. Already huge, I mean, absolute huge movement from last week. All right, so from where we closed yesterday to where we are now, that's over 150 pips about. And that's why I'm saying I'm not really looking for quick moves or explosive moves. We still have a bias and an understanding, but the delivery could be a little more wonky. Perfect. So far, really delivering pretty nicely. All right, first presented fair value gap gets respected. We trade through the wick. Wicks act as gaps. Aligned with the wick, we leave another bearish fair value gap. As we said, the protected high within that shouldn't be traded up and through. So we end up returning into the bearish fair value gap. And there is sell side one. So closure below the 1 minute, I do like that now. To where if we can close below this, right, continue to really reach for some lows down in here. Let's see, closure below, that almost can be used as a potential inversion. Like if we were gonna look at something here, right, you can maybe favor like a 1 to 2 like this. I would prefer that we close below. We did close below, okay. So yeah, let's see if we want to use this as an inversion here now. Coming off of sell side, right, could be risky just because we've cleared liquidity. So on lower time frames, it's going to be a wick. We'll see if we leave. If we end up leaving a 1 minute here though, I actually don't mind that. We might try that as a little low risk entry. So to go from inversion here to attack this sell side, if the 1 minute fair value gap gets left open, aligning with basically the 1 minute inversion here. Yeah, we'll try it. So just a simple 1 to 2 on a day like this. Low risk entry, low probability conditions mean lower risk entries. And we're going to target that sell side there. So as we said, right, that low ends up being put in right there like that. Oh, they don't want us to be great. So right now we're coming off of this wick low. Same idea that we see here, right? If we're going to put in a swing low wick and then retrace into a premium and break through that wick here with this candle, we can look at that wick to act as an area of potential resistance if we're on sides. So now, even though this is a lot smaller wick, I'm kind of using that same understanding that we've engineered a swing low here in the form of a wick. Right, this one's inside of a predetermined discount already as well. So now as we return up higher, break through that wick, just interested to see if that becomes an area that is sensitive to price. Right, as we said, already cleared sell side, 2 minute, 5 minute, it's a wick. So high risk entry, right, lower probability. But we're simply trying to hop on board and see if we can't get maybe one more run lower into lows and then potentially, as we said, sell side here. Even if we don't get here, right, once again, we have another low here. So we still do have a few more just sell side objectives. We're turning into the wick, that's fine. Right, that's why we let the stop breathe a little bit, because in theory, we can come all the way back up into really, I would say, consequent encroachment of that. Wouldn't want to see that, would kind of want this to be the high. So honestly, with that huge wick, if we close below, I'm going to move my stop immediately to that wick, because at this point, I don't want to see higher than that. Right, so boom, we could already cut risk, especially with how we're moving in the market. I just want to be in and out of trades quickly. I want this 1 minute to hold us, which means that I want this to be a protected high. So I'm fine with having our stop where it is. Now, as we accelerate, and if we can clear out some sell side, is that 5 handles? That is 6 handles. So to be honest, yeah, we're just going to be, right, we're going to take what we get today. We're going to be content with enough. We're going to try to buy one back right there, which will allow us to go to break even. So I could take all my risk out of the market, probably at that point. We don't like that. Okay, we don't like that, to be honest, at all. Not even in the slightest. That is worst case scenario. Very bad. Bearish volume imbalance, so I want that to stay open. Okay, that gives us some saving grace, so we're going to allow this to run. That volume imbalance is aligned with this sell side, which is why I like that, okay? So now we want to see at least one partial quick, one partial get taken off. Okay. Let's just not be greedy, because price is playing here. So we're going to go 5 handles. 5 handle exit for the first partial, which will get us right there. Cool. All right. So ends model on this Monday. Keeping it simple. As we said, that'll put us right there. Might have been too late, but we'll see. As we said, in this type of delivery, you just kind of commit to the idea. If it rips against us, it rips against us. But yeah, don't like that at all, right? Wicking lows, falling short of sell side, so we'll watch and see what happens if we return into this right here. Want us to close below this sell side again. We did it once, but now we're struggling too. Right, so I want to see us make an effort to close below that sell side and gravitate into this sell side right here. Because this is just gross. Retesting the 1 minute. So after that, we would need to attack this quick. Bearish fair value volume imbalance. Yeah, just ugly in here. Jeez. Closure above that 1 minute, we're out. Right, we're gonna get stopped. And stop out. Yeah, we're getting stopped here. Bullish volume imbalance. One candle's chance, so we'll see if this candle needs to overtake not only the volume imbalance, but okay, yeah, we're getting stopped. Right, you could tell right immediately as soon as we reject there, leaving that volume imbalance open. Pretty easy. There we go. So we fell short of that first partial, just barely. Enter on the wick high, fall short of that sell side as we said. We're not really expecting crazy movements. The price is pretty ugly this morning.
Your gut affects everything, even your mood. So Ollie created 2 brand new products to
We'll watch it now. Do we want to clear that high out?
Probiotic has 10 strains of probiotics. They're most ever to support a healthy gut microbiome, immune system, and stress response. And Ollie's super
Every week we get top ticked and then reverse.
in tasty gummy form. Find them at ollie.com and exclusively at Walmart. These statements have not been evaluated by the Food and Drug Administration. This product is not intended to diagnose, treat, cure, or prevent any disease.
Ryan Reynolds here from Mid-Mobile. The message for everyone paying big wireless.
Equal highs, so now I'm going more bullish. Right, this is more bullish in my mind. That we're going to want to use that 1 minute, reclaim it, inversion, accelerate higher.
Paying no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at midmobile.com/save.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only. Then full price plan options available. Taxes and fees at see full terms at
That's hideous. I might try to go. Nah, we're gonna wait at this point. So we'll see if we got stopped out for price just to run in our direction anyways, but with how we're moving in here, pretty ugly. So I want to wait to see if we want to revisit first presented fair value gap. So reaching back for first presented fair value gap. We've closed above that. Notice fair value gap and wick, leaving behind a bullish fair value gap or volume imbalance. We're gonna move the wick for now, focus on that inversion, right? Because this is what we're gonna more than likely use here. So bearish fair value gap that held us as we trade through that, that becomes inversion. Hitting the first presented fair value gap. So at this point, really kind of at a stalemate. Right, we never got into this consequent encroachment of this fair value gap. That's here. So we could run out this high, hit that consequent encroachment, roll back over on itself and still attack these lows, especially because we fell short of that. If we were to accelerate through this though, I like that as a potential inversion play. To then maybe try to target some highs up here. Perfect delivery into its high. There's midpoint, so now we can move that midpoint. We'll keep that buy side level there. Now I want to see basically, do we retake the original bearish fair value gap here? And now you'll notice within that, there's also a 1 minute bullish. So overlapping PD arrays, for the time being, both discounts, right? Inversion plus just a regular fair value gap. Perfect delivery into buy side, into the high of the first presented fair value gap and clearing out this short-term high. So yeah, we're gonna watch and see. We could actually go, like if we want to be real precise, right? This volume imbalance here. We see what happens within this. If we close below that volume imbalance, I might almost want to try using that. This would be an aggressive entry, but above its midpoint, I still want to get that low. A 1 to 2 like this. All right, we'll try to go back in one more time. And right, this is nice because by cutting risk in half, we're basically allowing ourselves to use more entries. So yeah, we'll try one more time to get short. Buy side cleared, short-term high cleared, displacement lower, bodies refusing to clear or close inside of first presented fair value gap. Inversion has been reclaimed, bearish fair value gap inside. This may have been the entry, but I'm just trying to get a higher entry, right? So this is valid for sure. This is one we may miss just because I'm trying to be more precise. And because price is moving a little bit more sporadically, right, we may get a deeper retracement into higher premiums and still hold. Matter of fact, we could almost even, now we'll just leave it like that. So we'll leave like this. If we leave, it looks like we're gonna end up leaving now another bearish fair value gap right here. We do, okay. So now we may either just run or we may just use that and dip lower. That though, right, is a rather large stop. I don't like that. I'll leave this. As we said, not in a rush for entries. I'd rather be precise. NQ failed to run that high out as well. Right, so we have SMT there. So now, yeah, we would look for these lows for sure. Back to the original objective. Maybe bounce off this 1 minute to come up into our entry and then attack the sell side. Right there. Wouldn't complain about that. Let's say we were going to use that fair value gap. With an aggressive stop like this. We may want to try that actually. Five minutes candlestick is closed. 2 minute candlestick is closed. I think I might just go for the low hanging fruit entry, yeah, which is the actual fair value gap right here. So we'll do that. Cut our stop a little bit to where it's just above this liquidity. So I don't want to see this get ran again. That'll give us a 1 to 2 if we can get this low. Same idea, partialing here at this sell side if we get it. Close below the 1 minute. So we may just actually run from here. Watch this now, right? Does that become reclaimed? So it was originally bullish. We trade into it, we invert it, trade back above it. Now we trade under it again. I don't want to see that hold us, honestly, and just push us right into the sell side. Slow delivery, but should get in there. Still have the entry set here in case we want to spike up into that. But wouldn't be surprised to see this 1 minute be our basically area of resistance for the time being. That accelerates us into these lows. So we get the retracement into the original bearish fair value gap paired with this now most recent bearish fair value gap coming off of our first presented fair value gap. We fall short of these lows, so I still like the idea of trying to get that low. From here, we may just do a full pull into this first sell side pull. Still got to get there anyway. Could just run straight through this. I'm really looking at this one here, so just so you guys can have the same kind of focus that I am. Not necessarily paying too much attention to this one, really looking at this one here. Bullish fair value gap, okay, so we want to see the discounts that get formed be invalidated. So at this point, especially as we leave the 1 minute, right, this is going to be a pretty strong bullish area. Price would need to dive right through that, close below that for us to feel confident in this. And then ideally we look for lows here. As we said, we probably could go, I mean, if we're smart, we just close the 5 handles, but we're not smart, are we? And we miss it again. That's all right. This PA is going to take more than... With this PA... Are you saying, is this going to take more than 1 minute PD arrays? Or what are you asking, Harry? Sorry, ask that again. Trying to figure out. Okay, because we're moving so hideous, yeah, we're just going to take low-hanging fruit, as you said. We're going to close one partial if we can. Which we may have missed our partial opportunity twice. That's okay. So we have a new swing low at 5 handles. That'll give us a nice partial opportunity to buy one back. Yeah. Oh, very difficult. Yep. I have other time frames up, right? So I always have a 15 for sure, at least. And then I usually have a 5-minute as well. And yeah, very difficult price action in here, right? Which is why we're keeping it small. Like if you see the 5-minute, right? I haven't taken any actual trades. But the reason we're doing that is because, I mean, if I do show you something like this, let me decide to hide all. It's really not much to go off of, right? Like we're really just consolidating in here. Same on a 15. We haven't moved in really either direction. So at this point, where I'm not trying to catch large moves as we had mentioned earlier, just micro scalps. So for us, right, we need to rely on the lower time frame for that. NQ is yet to get into its fair value gap, so we'll see if NQ wants to do that, which would push ES a little bit higher. Once again, creating protected shorts, or protected lows, excuse me, right? So this low protected, create a new low, fail to clear this low, and now as we mentioned, this is going to be a very bullish area in price. It catches us, accelerates us. Still not convinced that all of this isn't just nonsense to run price lower. So at this point, we're fully committed to just holding, right? If we're wrong, we're wrong. We're always going to be wrong. We've hit the high of that fair value gap perfectly. So now we start watching discounts. If we're off sides, discounts hold us. First discount that we see, volume imbalance here, looking to want to hold us. All right, so if we're wrong, what's going to happen is this is going to hold us. It's going to accelerate us above this bearish fair value gap, which is going to basically invert this. Price more than likely is going to want to retest first presented fair value gap. If we don't immediately reject from that area, more than likely we get stopped, right? Because price is going to continue to venture higher, respecting these discounts. Bullish, that's bullish. All right, say you're opposing entry. This would be like your counter trend trade here. Trying to target maybe like consequent encroachment, who knows. But I still like the one more run on them lows. Get them lows out of here. All right, notice volume imbalance, as we said, that's going to be key. So that's really what I'm watching now. My attention goes to the volume imbalance. Body's telling stories. Can't even get back into the volume imbalance. That's not too good. Let's see. Bullish volume imbalance, so my attention really goes to still this volume imbalance here. Okay, really at this point we're just playing inside this bearish fair value gap. We've hit the high of it. If we're on sides, that should be really as far as price wants to go. Okay, so we were able to get below this. Nice. Now we want to see, oh, not that. Wanted to get at least this short-term low. We want to get one of these lows, right? At this point, once again, creating lows. If this holds, that's another low. We'll see if we can at least get below the volume imbalance. Try to get one partial off. Gross. Close inside, cool. Let's see if we can't get through that finally. Acceleration. Partial out. Make back the loss. Get us back to break even. Oh, we're gonna hold this 1 minute. Jeez. Why did the volume imbalance above buy side not stop you from entering short? Okay, why did the volume imbalance above buy side not stop you? Why did the volume imbalance? This one. If you're referring to this one here, the reason I was okay trying to go short off this fair value gap is because price, right, had already made the first presented fair value gap, and that's this fair value gap here. So I understand that we do have this volume imbalance, but this in itself is the 930 candlestick, right? And this candlestick in one swoop motion really clears lows here, and then we end up clearing this low. So as I do look at this volume imbalance, and especially as we have failed to trade into it with this candle, I'm not necessarily expecting that price wants to make that deep of a retracement into this range. Right, because I kind of look at this, especially as I look from this high to this low. Right, so as I'm looking at this, I'm seeing as how heading into 930, price had repriced basically into all of the discounts left behind in this leg. We move higher, clearing out a short-term high, and then we displace, leaving that range. Right, so as we leave this range, I'm not expecting price to have to return into it because it should be balanced. Right, at least before we reach into some sell side here. Which is why I'm fine trying to use this fair value gap. Right, could be wrong, of course, but as price traded up into it here with this wick, hit that high perfectly and then displaced lower, I'm fine trying to use that. Right, of course, it's just ugly delivery in general, which is why we go in with lower risk. But for the time being, we'll see if we don't want to do that. As we said, if we're going to retest this, we need to hold from this low. So we would need to basically aggressively move away from this area. Because now that we've already hit almost midpoint, we've hit the high of it, and now we're coming into it again, I want the low of that to be really the most sensitive area in price. So I want to see this create a wick and move away quickly. If we push into this, or if we close in here, we're going to get stopped. And I'm pretty certain of that. Boom, 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 boom. This would be really last case for us. So yeah, look at that 1 minute just holding. Right, all lows protected. We close inside. We do have a bearish volume imbalance, but I think we still get stopped here. Right, continuing to push higher. Body's telling the story. Body's closing the side. First body to close inside indicates that we want to expand higher in my mind. Right, because this body, or at least this candle, was only wick, and this candle was only a wick. So price was unwilling to close inside of that fair value gap, which is why we get the rejections. Whereas here, price is willing to close inside, and then we'll see, oh, we just got stopped right there, right? So there's that stop out, returning into this original buy side. So we'll see what price gives us from here. We'll see if we want to attack the high now. Right, the 5 minute swing point in here. Closure above the high, yeah. So right, notice how the bodies keep closing higher and higher. Another telltale sign, we go bullish volume imbalance. We then create a bearish volume imbalance that gets closed in, right, without any wick lower. So when this candle opens lower, it doesn't even make an attempt to trade into the low of this fair value gap. Instead, one-sided delivery straight through the original high. And as we said, that to me is pretty bullish. So we should now see price want to reach into this high here. And if we close above that fair value gap, then right, our attention could shift to potentially some highs. As we stated earlier this morning, however, we still do have this whole bearish fair value gap here that was created with the 930 candlestick. And these lows are just so clean. I might just try one more. Yep, 15 up there, 5 minute, right? If we can clear the 5 minute high, that'll also be getting us into the 15 minute. The 5 minute high is the 15 minute fair value gap itself. So all of these areas are kind of converging, right, to be the draw on price, which is really what we expected as soon as we got back above the volume imbalance here, holding off this 1 minute. So as we said, 5 minute swing point, so that's liquidity. Also the 15 minute fair value gap. So an easy area for price to trade into. But that's not necessarily why, or that is why I'm not necessarily full bullish at this point. Because I still think all these lows too clean here. Just way too clean. Once again, perfect delivery into the high. Closure above. Once again, bodies telling stories, right? Closing above the fair value gap first time. So now we look for expansion. I would say at least in the midpoint here, this fair value gap. Best case scenario for us, we actually get back below this. If we're going to be bearish, which I think we might just commit to that this morning. Could be wrong, of course, right? We obviously see the bullishness, but I always like to pick out kind of one side when the market is just in this type of chop fest. So for me, really what I'm looking at is, do we want to hold from this bearish fair value gap and this volume imbalance potentially, right? Also the breaker, high, low, higher high, broken. So a lot of PD risen here. Do we hold from that to then get us back underneath the first presented fair value gap? Which if we did that, we may actually give one more chance to get this sell side out. And if we get stopped there at that point, we'll just call it a morning. So now I'm watching the midpoint of this first presented fair value gap here. So let me bring up just the levels. So just bringing up the levels of it, the anatomy of fair value gaps. As we close above, each of these quarter levels is going to be an important area. So I'm watching midpoint, I'm watching this lower quarter level because there's a bullish fair value gap there aligned with that. All right, you'll notice that, just like that. So now this is where we watch. With this, can kind of eyeball that. Notice what we did here with that one candle. We close above, but this candle kind of negates that candle's action. That's what that one candle rule I like to talk about. To where even though we closed above, the very next candle opens with a volume imbalance inside of the actual fair value gap. Right, in my mind, negating this previous candle's action. So now we would need to see another candlestick close above, especially with displacement ideally, to really confirm that we can use that as an area of support to accelerate us higher. Because on a higher time frame, that's just going to be a wick, right? Like a 2 minute, anything really higher than a 1 minute or a 2 minute. Okay, so the 2 minute was able to, but like on a 5 minute, it's a wick, right? Anything probably like a 3 minute is a wick too. Let's see, yeah, 3 minutes a wick. This is where you don't want to get too caught up on those lower time frames. I could be here to know it. Yeah, they really should have the whole inefficiency. They don't listen to price, or they don't listen to Michael, I guess. But that's why I'm also not too worried about this one candle here. Because you're right. Well, you're going to look at this as well. Pair them together. All right, so bodies once again working. So you could almost, all right, say you're very aggressive and you're fully confirmed that you want to go bearish. You can almost try to use its consequent encroachment here
I don't know if you knew this, but anyone can get the same
to go lower. I want to see full closure just because we do have a bullish fair value gap here.
Do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com.
Closure below that, like we said, we'll give it one more chance. And at this point, if we get stopped, we're just offsides, right? Because we've engineered sell or buy side here, we clear it, we then clear it again. If we revert below that new day opening gap and get above it one more time, just ugly. So at this point, we've hit the 15-minute fair value gap. We've hit the 5-minute fair value gap. We do have a bullish 5-minute fair value gap. Okay, that's going to be here. So now this could, as we said, give us some hesitation. And I really would rather see the 5-minute close below that, but we might not get it. Do we close below here? We did close below there. Okay, we're gonna try one more. Boop. Same risk, right? No need to adjust what we're doing. 1/4% risk, cut down from a 0.5% risk. And I allow myself 2 0.5% trades usually, or losses per session. So with this, we could, in theory, have 2 more losing trades, but I'm not going to push that many just because that'd be goofy. So in this case, I'm almost disregarding the actual price action and using these key levels here in the form of the first presented fair value gap. See if it gives us the entry. Might miss one. This would be the one that we don't get, of course. That's trading. Need to hold this volume imbalance. Give us a nice little, or at least this 1 minute. Won't mind a retracement. Because what, yeah, we're gonna try to use, there is a fair value gap here, but yeah, I like that, how we had that set up. Or do we go, just trying to debate if we want to cut it like this. Nah. And right, the fair value gap I'm looking at is here. So we may be unfortunate and miss an entry, but I want to see the actual first presented. And yeah, at this point, if we run through this, that's just it's retail day. All right, we should just went straight retail, traded the trend line. Anytime price touches this line, it goes up. Easy. Easy reads, guys. Y'all didn't know trading was that easy, I bet. All right, here we go. As I said, it should either be wrong or right quick. If we're gonna tap that again, we should either blast right through it, or we should reject and attack one low, at least this low potentially. We hold from the volume imbalance, so that's what we wanted to see. Create another short-term swing point. But now at this point, right, we want to see price hold from here and start moving away. Da, 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 da. That 5-minute fair value gap held aggressively. That's not a good sign. We have 1 minute until the 5-minute candlestick closes. So for us, we would want to see price close below. Let me bring that back up for you real quick. This. If we can close below this 5-minute right here, that'll be a good sign for us. All right, so now my attention goes to the 5-minute. We should probably take a partial at this low, because we've been burned twice now, missing our partial. That volume imbalance would give us 5 handles actually. but we just closed below the 5 minute. So because we did close below that 5 minute, I think I'm gonna let this one run, and we're gonna take one partial. Okay, let's not do 3, let's do 1, like this. If we bounce from here, I lied, we're gonna do it right at this low. Because we're not gonna be greedy and reach for an extra 1.5 handles, that's silly. So partial 1 here. Okay, which now frees us up because we have partialed. This is gonna be a pretty key area. I kind of want to move stop, but where? So for us, we're going to go ahead and use, we didn't get into the midpoint. We're going to wait and see how this candlestick closes. If this candlestick closes below these lows, I'm going to move it to the midpoint. If it doesn't, I think I'm just going to leave it where it is, and we'll wear a stop out if we need to. Because now at this point, I've already closed half. So right, the stop out, if I was to get stopped here, this would be a break-even trade, because the first contract was 250. But I think we finally get into all these lows here, right? So I want to see this 1 minute needs to give way. 1 minute gives way, and then yeah, we're targeting this at least. I mean, 1, 2, 3, 4. We could go. Nice. So now we want to get below that. If we close below this 1 minute, our stop will go to break even. Perfect. Okay. So now risk-free trade. Oh. Okay. Risk-free trade. We'll go into break even. We're fine with that because, right, this 1 minute here, inversion, 1 PD array, bearish fair value gap here, another PD array, and now this volume imbalance that's aligned with it. Okay, so if we clear all 3 of these and reach all the way back up into this first presented fair value gap, we're also going to be getting back above the 5 minute. I just don't want to be involved at that point. So now we just wait for a nice run into sell side here. Maybe we do aggressive because I only have 1 contract on, and I still favored the actual lows like here. Nah, we won't be greedy. We'll go low hanging fruit. So we're actually gonna go, I think I might go here. Are these equal lows right here? Those are equal lows. So we should get into the sell side. Engineer equal lows as we clear out sell side right there. Oh, perfect. Hello, get me out. Nice. All right, well, there we go. And now we're done. Purdy. We'll see if we want to get that final sell side, but let's see what we get. Let's see what we get. Hey. Be nice to get that low. Swing high. Swing low. No, okay, now let's not clear this low. How dare price? Give me a swing low. Oh my gosh. Sounds good, Howie. Take care. We'll be back tomorrow after CPI. If we leave a fair value gap here, I would actually look to see if that is what holds us. So right, short-term tap of this, then run lower. Don't want to see all the way up here, but especially if this fair value gap gets left just like this, which it's going to, okay. See, if you can anticipate fair value gaps, that's how you know you should be on sides. I mean, look at that. Come on. The fair value gap is what? It's literally the key levels. The exact area, right? It's the exact sell side and the exact sell side. We leave that fair value gap. And then right here, one candle, open bullish volume imbalance. That candle doesn't even make an attempt to turn into that. And then we, boom, sell side. So now do we get a release all the way into the daily? That's kind of the large objective, the daily. As a matter of fact, let's bring up my RTH back. What's my indicators? I forgot what the midpoint of that was, but we should accelerate into this daily fair value gap. Finally get that release we were looking for. Midpoint, oh, that's way down here, geez. I don't know about that, but okay. Oh, that's the data low, hold up. Maybe actually. So you'll notice that midpoint of the RTH gap, if I go left, is these equal lows right here, where this huge move originated from, basically. So if we're gonna wipe this entire price leg, this would be a pretty smart area to look for. Cool. All right, I had this again just because it's in the way. How long have you been trading? That's a good question. I'd say, let's see, it's been 2018, 2019, 27 years. God, I don't know, 8 years? 2018, mid 2018 is when I first started. So let's say July of 2018, that would make 2019, 2020, 21, 22, 23, 24, 27 years. 7 years in July. Damn, 7 years, that's crazy. Yeah, sometimes I forget. Been around for a minute. How long until you turn profit? I'd probably say 3 years. But even then, like, I'll be honest with y'all, right? For those that are first joining, I lost most of my accounts recently. So it took me about 2.5 years to get, I'll say, okay, 2 years to get break even, another year after that to actually make any type of profit. I was good for a few years, and then within the last year or so, I kind of ran into some off the chart issues that then translated into the chart. Of course, I'm still up overall, I guess I would say, in my lifetime. But as of now, we had to restart my accounts. So I got a few 300K accounts through Apex, right? That's what I utilize. Back up to building them up. But yeah, at least 2 years before I was able to stop losing money. This is full. Yep. This is all I do. Right at the entry, there are two 1-minute candles that are REH. What importance do you give those? So at this point, I'm not paying much attention to these until we were to clear this. Like if we can, right, get back above this sell side, then this would kind of become just short-term targets, because it's also right below, as we've been referencing, the midpoint of this first presented fair value gap. Right, so it just makes sense that if price wants to return bearish and attack previous key levels, buy side that is just below the midpoint would be a good target. Especially because now, right, let me hide everything like this. From this high to this low, that's our current price leg. And there's no other liquidity in there. There's inefficiencies, right, like here or here. But if we're gonna want to target liquidity, this would be the first area of liquidity that we could actually target. And it would make sense because, as we said, right, we're expecting price to go lower this whole time, not only because of the first presented fair value gap and this huge gap here, but also just the way that price is delivering into these areas, right? Ever since this low was created, it was all protected lows. So a higher low, a higher low, a higher low, a higher low. Retail sees that, of course, phantom trend line, we call it. We break right through that. And now let's say those same retail traders are trying to catch a short. What would be the most carnage, right? The most damage? Well, it'd actually be to return and then run out the high up here, because people are going to be trying to short this. That's just kind of the thought process I go to. Right, and then I look for price to confirm that thought process in the delivery of the candlesticks. What's your model? I kind of said this in the past. At this point, I don't really have a model. Right, we have the YouTube model, I have breakers, I have fair value gaps, but I've been trading with ICT long enough that it's much more just trading what's in price itself. Right, the models help confirm the understanding and the bias, but in reality, I could really trade just order flow. I would say most of my A+ setups are from the YouTube model. So they have the framework of the YouTube model, right? They're not always the same, but like even this one right here. Let's kind of just clear all this because it's getting a little messy. We'll bring it back. Right, this A+ setup that ended up working out isn't necessarily the YouTube model per se, but it's kind of the framework of it, right? Where we clear a short-term high, we then accelerate lower. We didn't clear a short-term low in this case, but that's what I mean when I say I could really just trade price action itself, because we understand breaking lower, even though we're not clearing a short-term low, we are breaking back below the first presented fair value gap. So that becomes the kind of the flip point, right? The initiation. Once we do that, easy entry, and then we run lower. But yeah, there's really so many models, right? ICT's concepts are really more just a language. Once you learn the language, it's up to you how you want to apply it and how to use it. What works, yep, exactly. And you'll find that too. Once you graduate, that's funny. Once you get proficient with the concepts, you really can use them fluidly, however you would like. The best setups will also come when more than one model is presented as well. What's something like this right here? I'm not going to take it because we're already good on the day. Made back our profits. So once something like this happens, right, where we deliver into my objective that I'm looking for, I'm not really trying to force anything. So this becomes more where I start tapering once again, and I want to follow price legs. We can try to anticipate the moves. You don't need to be in the move, right? You don't need to be involved in every move. So like for me, I'm watching this and I'm thinking, okay, so we clear that sell side. We left a bearish fair value gap and volume imbalance as we do that, which usually that in itself is a bearish indicator that price will want to continue to run lower. I see that price though immediately reverts that and closes back above. Right, so already this becomes kind of less probable. And that's where we just wait and see. If we kind of invert this again and close above this candlestick, I'd want to see if that holds us bullishly to run at least into, my eye immediately goes here because that's about equilibrium. If we took this high to this low, high to low, right, equilibrium's here, fair value gap just above equilibrium, that is kind of what we would look to reach into. If you want to take the true parent leg, it would be this high here, because this is the high that clears another high, right? Well, this one is more just an extension of this original high to low, if that makes sense. Yeah, so now I watch and see, does that down close candle here want to be used as a spring pad to get up into that, like that. I almost want to use liquidity. If we're going to continue to do this, yeah, I'll just use that like that. So let's watch this. I do have a Discord. It should be in my YouTube, I think. I don't know, I have to actually get that all set up. I used to have a premium group for a few times, a while ago. But then I kind of stepped away from all that for a while. But now I'm trying to get it rolling again. Yeah, I believe my Discord is just in my YouTube profile. Let me go, let's see, if I went to my YouTube. I went here, where does this take me? When do you plan to reopen? That's a good question. I don't know. I kind of want to just do these free streams for a bit. Right, maybe build back the following I had. And then really the premium will be more for access to me. I kind of want to leave the live streams out of it for now. So that'd be more free content, and then the Discord would be just where you can go to actually, like, if you have questions, right, get a hold of me. Because right now you can't really talk to me outside of this. So that's what the Discord would be for. Questions. And the Discord has already been around, so there's a lot of like content in there already. So there's a lot of like concept videos, there's a lot of previous live streams. How I journal's in there, right? My journal template and things like that. So look, that would have been delivery right there. So the intro here on this, right, would have been purge. We clear that sell side. We always watch the last premium that gets formed as we clear liquidity. So for bearish, creating a bearish fair value gap paired with a bearish volume imbalance as we clear sell side, that is an area that should hold us, as we said. So as we negate that completely, right, this you'll notice is what ICT calls to, or calls as his purge and revert. So where we purge that liquidity here, we then immediately revert back above that area. And now if we leave behind, right, a discount as we do that, we would look for that to hold us. That is what holds us. That low never gets reached. And then price reach right up into, as we said, equilibrium first we liked. We've actually closed above this, leaving 1, 2, 3 volume imbalances in a row. So you could almost go like this. This is be a quick scalp. And this would be kind of with the intention that we don't want any of these previous fair value gaps here to be returned into before the first presented fair value gap gets hit. Speed here, right? We often want to see be met with speed on the opposing side. Because just as we said, retail traders, what are they doing, right? They're going to try to maybe short something like this. So to not even give them a chance, we should just run straight through that, and maybe we clear this high again even. But in my mind, we should at least for sure get into this first presented fair value gap before returning into these inefficiencies. Once again, another bullish volume imbalance, right? So order flow telling us really what to expect. Multiple, actually, holy, that's 5 straight. 1, 2, 3, 4, 5 straight volume imbalances. We should easily run up into that. And why would we not need to return into these in the short term? Well, it's really kind of the same idea we talked about up here, right? The balanced price range. Where this liquidity that we're kind of targeting, right? So from this low to the highest high, that's the dealing range. As we clear out this sell side liquidity and return back into the range, all of this price action in here has already been repriced and rebalanced, right? Especially here, we already came into it again. So in reality, there's really no need to return into any of this, right? Any of this in here. So that's why once we break it, right, you'll also notice, where's that fair value gap line up? Oh my goodness, must be random. No. As we leave that, we should not need to return into that before this objective up here is met. Once we trade into that, then of course, right, we could bounce, retrace, try to redo this, but in the short term, I would look for kind of price to want to hit that area. Oh wait, I wanted, bring that back. I want this, like that. Right, so still this would be my area of attention for now. If price did get back under that, right, if price did get under that, then I would expect much more of just this, right? Oh, the consolidation heading into lunch. So get under it, maybe use it as a short-term area of inversion to maybe target sell side here again. But either way, I would expect price to kind of just continue to meander. Just gotta get the mojo back. Get your mojo. Yes, sir. No, I had to do that before I was streaming, honestly. I don't think I would have started streaming again if I was still struggling. Oh, look at that. As we said, price really shouldn't even want to attempt to come into there if we are bullish, but maybe. Watch for immediate rebalance here. Boop. Open to the low. Like that, right? We would watch and see that would be where rejection occurs to accelerate us into these. We do have volume imbalances here. Wanted to see them left untouched before a high was cleared, however. But we may get a retracement. Use a different technique. Let's see. You were trying to take a sell on NASDAQ at the close of 10.25. What's that?
Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. Default terms at mintmobile.com.
This summer's another scorcher.
With the 4 a.m. lows of ES as a draw? Wait, you're what? ES or NQ? Did you mean to say ES on the first one? I just noticed you had 2 different instruments listed there.
Customers can save more than $450 a year. So when the summer heat goes into extra innings, the savings come in for relief. More savings? That's a fan favorite. Ultimate season pass.
Sorry, that's what we would expect to see there. We'll see if we don't want to overtake. Oops. I guess we still need that, right? We need to overtake the wick here. That's what I'm looking at. I'm guessing, Mouse, though, you were saying if you're referencing ES, you were probably going to try to short this. Is what my expectation is that you mean. But you just didn't get the retracement before price delivered into the sell side. Yeah, because of the SMT on those lows. I'm just trying to figure out what you were looking at. So you're saying you were looking at... Wait, what is this? Why am I tripping? Oh, okay. I was like, why am I tripping right now? That's a gap in NQ? Hold on. Is my chart messed up? What in the... Huh. Oh well. Okay, but what? At the lows. These lows? I can't lie, Click. I'm kind of lost right now on what you're... What lows are you referencing? You would SMT at the highs here, right? Higher high, lower high, which is why we took this short here. But boom, all right. Yeah, look at that, right? So the wick becomes inversed. We then would expect that to offer us support. We want to see a candlestick close above the down close candle. And then the down close candle should be used as support to take us into first presented fair value gap. Okay, I see what you mean. So you were saying we cleared the 4 AM lows, we did. Oh yeah, that's exactly what we would want to see there. Cool. Well, that's a pretty good price leg right there. Right, run out the high, just as we had mentioned. The only liquidity in that leg would be here. So price immediately rips against that and targets those highs. We're tracing into the first presented fair value gap and closing. Did we close right on the midpoint? Tell me we did. Oh, just barely. Closing above the midpoint. So far, pretty good delivery actually. But yeah, let's see what you're referencing now. So you were saying NASDAQ does clear those lows here. ES failed too. Yeah, I see what you mean. But you entered on NQ. I guess that's why I'm confused. You said you took a sell on NQ. Or did you just mean ES? Because if you sold NQ in this scenario, well, I guess I hate to be someone saying that was wrong, but right, if you were trying to catch that short, you still could have, but ES made a lot more sense because it fell short of those lows, right? Like NQ had already delivered into the sell side, so there's nothing really to aim for as far as NQ, even though we did get this run lower. So now we watch and see, we could almost maybe take this short again. What time is it? 10:50? Is that crazy? Do we try one more? I kind of do want to try that. This is going to be a very tight stop. Let's see if we leave. Right, as we said, we want all these to be unfilled as we return into that. That's what we get. Now that we've cleared the buy side and revisited the first percentage fair value gap, now we can retrace into all the untapped inefficiencies from before. So maybe we try that. 5 minute is closed. The 15-minute. Did we leave a fair value gap there? Oh, we did. Just the smallest. Look, let's try a little scalp right here. We're going to try a little scalp. All right, so the entry for this, same really understanding as this here. Price rips into first percentage fair value gap, clearing a short-term high. Price rejects aggressively off of the midpoint of said first percentage fair value gap. As we close back below the first percentage fair value gap, we leave a discount. So yeah, we'll try that scalp. This candle's already hit it, so we may miss this and it may just run straight for that. But we'll see if we can't get one more tap. Right, we may have been 1 minute too slow. Oh, if you don't want to get a quick bounce. Oh, shoot. Well, right idea. Too slow. My entry should have been on this candle, which we were going to try to enter on that. Just too slow. I wanted to see if a fair value gap got left first. But you'll notice as we traded into that, what did we do? We left a bullish fair value gap. Immediately, we closed back below that. And then we use that as our rejection. Back now into the inefficiencies. So honestly, aside from this, after we got that true expansion, pretty clean delivery. But yeah, we'll leave y'all with that. About to be 11 o'clock. That's about the time I wrap it up anyways. Is that the first presented? I have 934. No, 934 here. Right, 931 here. Let me hide everything. 930 we don't count. 931 fair value gap first presented. 934 second presented. First presented more important. That's what we're keying off all the entries. And yeah, on that one just missed it barely. So we could have probably went in right away off that. That's okay though. Now at this point, I really don't have any other objectives, right? We've hit our sell side, we've come back up to attack and stop out anyone that was short, clearing out that buy side. So for me, right, we can bounce from here and maybe attack buy side again, or we could get lower and want to reach back into this original sell side. Since it's like that 50-50, right, that's when I just kind of walk away, let it be. But yeah, that'll be it for today. So overall, right, coming out just barely in profit. We'll walk through kind of the first 3 trades or just the setups for today. This first entry was trying to use this, just this little 1 minute fair value gap that was right here. Right, so price respected the first, it respected the second fair value gap. So we were just looking for that to continue. Remember, this was our original objective. It held there originally, cleared a low, but then retraced back up into that fair value gap. We then break away from their fair value gap again. Right, once again, leaving behind a bearish fair value gap. That was our second entry, still with the idea of trying to get into the sell side here. We get a good entry, price plays around in there a little bit, and then accelerates, stops us out again. One more time, revisiting that first presented fair value gap, and then right, finally giving us another breakaway. At that point, we're still confirmed to the idea, right? We're not getting shaken out. We still expect price to reach into this, especially because now on the way up, we have left all these lows behind. So as price leaves that first presented fair value gap again, we go ahead and go short, right? Using the first presented fair value gap this time. And then from there, as we said, first partial came right at the short-term low, and then final exit was just above that sell side. Right, so we didn't really need to get all the way in there, but we targeted this low here. So overall, pretty good day, especially with it being just before CPI, right? As we said, we don't expect huge ranges. We already opened up with a huge range. Like if I was just to kind of do this, in reality, we haven't really moved all too much off the opening. We're like an hour, just a wick. So we're just consolidating here, which is why it's a little bit tougher to find these moves, but you see, you still can. So yeah, we'll wait for tomorrow. For CPI, I like to basically watch what happens at 8:30 and then come back in the afternoon. So maybe we have like a morning stream, I guess. I'm just trying to think. Do we do it in the morning? No, I'll probably just wait. So we'll come back at 9:30 tomorrow. Only for about an hour or so, because I usually like to focus the afternoon during CPI. Let price play out. So yeah, plan for that. We'll meet up at the 9:30 opening and then hang out for about an hour or so. And then we'll come back for power hour to see what that offers. But until then, everybody, have a good rest of the day. Stay safe, and we will talk tomorrow morning. See you guys around.